Hi, this is Lachie from Edge21, and today we're diving into one of the hottest topics in Bitcoin finance, how MSTR's new yield instruments are reshaping Bitcoin exposure. Whether you're a seasoned Bitcoiner or just exploring new ways to earn yield, this episode will help you untangle the complex world of MSTR's preferred stocks and covered call ETFs without the noise. Before we dive in, a quick shout out to the Check on Chain newsletter and James Check for their outstanding research and analysis on MSTR yield instruments. Their deep dive helped shape today's discussion, and if you want to explore this topic in even more detail, you can sign up for their newsletter at checkonchain.com. Highly recommended for anyone serious about Bitcoin finance. So why is everyone talking about these new MSTR yield instruments? It all starts with MicroStrategy, now simply called Strategy, which has become the poster child for turning Bitcoin's legendary volatility into a suite of income-generating products. Over the past year, we've seen an explosion of new instruments, 2x leveraged ETFs, high yield preferred stocks like STRK and STRF, and the covered call ETF MSTY. Each of these is designed for a different type of investor, and together they're changing how both institutions and individuals can participate in the Bitcoin ecosystem without buying Bitcoin directly. Let's break this down in simple terms. Strategy's core business is about packaging up volatility and selling it as a product. As one analyst put it, the volatility premium of 78% baked into MSTR options exceeds that of the Mag 7 and even Bitcoin at 48%, suggesting there is no shortage of supply for their product. That means MSTR is more volatile than even Bitcoin itself, and that volatility is being transformed into yield opportunities for investors. Now, let's talk about the first set of instruments, the preferred stocks, STRK and STRF. These are bond-like equities, each with a $100 face value. STRK pays a perpetual 8% annual dividend, while STRF pays 10%, both paid monthly or quarterly. What makes STRK unique is its conversion feature. If MSTR's stock ever hits $1,000, each STRK can be converted into 0.1 shares of MSTR, giving you a slice of the equity upside. STRF, on the other hand, is pure yield. No conversion, just a steady 10% annual payout. Here's a great quote from the research. For more conservative investors, a consistent 8 to 10% yield without the drawdown risk of Bitcoin and MSTR may be an appealing proposition. And here's a key insight. When these preferred stocks trade below their $100 face value, say at $85, you're not just getting the 8% or 10% yield. You're actually locking in a higher effective yield because the dividend is paid on the full $100 face value. For example, buying STRK at $85 gives you a 9.4% yield. But what about risk? These instruments sit between debt and common equity in the capital stack. If anything goes wrong, debt holders get paid first, then preferred stockholders, and only then do common shareholders see what's left. That means STRK and STRF are less risky than common stock, but not risk-free. The market discounts their price below $100 when it's worried about Strategy's ability to keep paying those juicy dividends. Let's bring in our first graph here. Price for MSTR preferred stock STRK and STRF. This chart shows how both STRK and STRF tend to hover around their $100 face value, with dips below during periods of market stress. It's a visual reminder that while you're getting yield, you're still exposed to company risk. Switching gears, let's talk about the covered call ETF MSTY, by far the most interesting instrument for yield hunters. MSTY uses a classic options strategy. It buys MSTR call options and sells higher strike calls to generate income. In plain English, it rents out the upside of MSTR in exchange for a monthly dividend. The result? MSTY has delivered an annualized yield upwards of 85% since launch, with some months spiking even higher. Whilst the MSTY price has been basically flat at around $20 to $23 since Feb 2024, it has earned a massive cumulative dividend of $36.90 per share. That's a staggering income stream, but there's a catch. MSTY is fully exposed to MSTR's downside. If MSTR falls, so does MSTY, but the income acts as a cushion, softening the blow during drawdowns. Let's reference the example covered call diagram winning trade and example covered call diagram losing trade graphs here. The winning trade diagram shows how MSTY captures the volatility premium when MSTR rallies, while the losing trade diagram illustrates that even in a downturn, the income helps offset the losses, but doesn't eliminate them. Now, you might be wondering wondering, how does MSTY stack up against just holding Bitcoin or MSTR? If you look at the MSTR versus MSTY performance graph, you'll see that MSTY's price alone looks unimpressive, just an 8% gain since launch. But when you add in the dividends, total return jumps to 180%, outpacing Bitcoin but still trailing MSTR's wild 480% run. And if you reinvest those dividends, the compounding effect is even more powerful. MSTY trades off MSTR upside for a high monthly income. Over a long enough timeline, it should pay itself if MSTR remains a volatile stock. That's the crux of the strategy. You're betting on continued volatility, not just price appreciation. But as always, there are risks. MSTY's income is taxed, unlike unrealized capital gains. And if you buy at the top, you'll feel the full force of any drawdown. The realized volatility for MSTR securities 30-day graph shows just how wild the ride can be. MSTY and MSTR both have volatility profiles more than double that of Bitcoin. This is not a set and forget savings account. It's an active yield strategy for those who understand the risks. Let's wrap up with some big picture takeaways. Strategy's new yield instruments are giving investors more ways to participate in the Bitcoin ecosystem, whether you want high octane upside, steady yield, or a blend of both. As one analyst put it, volatility is vitality. Without volatility, your asset goes nowhere, and it is much harder to achieve outsized returns. These products are all about channeling Bitcoin's energy into new forms of yield, tailored to every risk appetite. Before we close, here are a few of the most impactful quotes from today's analysis. The volatility premium of 78% baked into MSTR options exceeds that of the Mag 7 and even Bitcoin. For more conservative investors, a consistent 8% to 10% yield without the drawdown risk of Bitcoin and MSTR may be an appealing proposition. MSTY trades off MSTR upside for a high monthly income. Over a long enough timeline, it should pay itself off if MSTR remains a volatile stock. Volatility is vitality. If you don't have a volatile asset, you don't go anywhere. Thanks again to James Check and the Check on Chain newsletter for providing the detailed analysis that made this video possible. For those wanting to dig deeper into MSTR's evolving yield products and other Bitcoin insights, be sure to check out and subscribe to their newsletter at checkonchain.com. Well, that's a wrap on our deep dive into MSTR's yield revolution. If you found this breakdown helpful, don't forget to like, share, and subscribe to Edge 21 for more expert insights on the evolving world of Bitcoin finance. Got questions or want us to explore another topic? Drop a comment below. Until next time, stay strong and hodl on.